In this video, I'm going to discuss exactly why every investor ought to know exactly what's going on in the options market, specifically if they own stocks or just trading it in general. So you don't have to be an options trader to understand what's going on in the options market, but the option market does influence what happens in the stock market. And I'm going to show you an example here, real life example of a position that we have in our Stock Alpha report newsletter and what's happening as we go into earnings. So we're taking a look here at Smartsheet. I'm doing after the market close here, and I'm going through names, trying to find some opportunities. And I was looking at some bearish names, and this stock that we own in the Stock Alpha report is on here because it has earnings next week. Now, the Stock Alpha report is a stock newsletter that we're looking for holds for many months to a couple years. We're looking for the longer term trends in that. But it is important to understand as we come into earnings or just overall what possibly could be going on or someone positioning for something to happen in that specific stock. I'm going to walk you through some nuances here on Smartsheet. But what I noticed here is that earnings are coming up and next week, and there was strong activity today. It was a 600% increase in volume or options traded over the last 22 days, and all that was dominated with put buying. Now, that doesn't necessarily mean that someone is buying because they're bearish on the stock. That's the nuance with following put buying versus call buying, is that the market overall drifts higher. That's how money works. So when you buy a put, you could be long stock and hedging that. Now, when you buy a call, typically that's just a more speculative bullish bet. And that's why a lot of times you see more call activity or hear people talk about more of the calls. It's more of a directional based. The put could be hedged. It's always the insider analogy. Insiders buy for one reason only, and they sell for many different. It's kind of the same thing. People buy calls for one reason only, typically, and they buy puts for many different reasons. So, looking at Smartsheet here, we have earnings coming up next week. We have a holiday coming up, so we have Labor Day. So we have a 3-day weekend, and this activity is coming on a Thursday, which Friday is going to be slow trading as well. So it's interesting to see this positioning ahead of these earnings here when they could get in tomorrow, but they got in late today. It's just interesting to see that positioning here. But we got into this stock all the way back in September here at 43. Now it did go up to 85, pulled all the way back. That's that's being a long stock. You go for this. This is longer term view, getting the trends. But now here we're back at 81, which is the reason why we could be seeing this buying here. Someone could be hesitant of what's going on here. We're coming back into resistance and just having a position on and buying some protection. It would be an institution doing this, but that could possibly be it. Now the thing here is if I as an investor were worried at this point of risk, what I would do is I would sell some of my position. It's the best thing. If I was worried about this earnings, which if you're owning stock, quarter to quarter, you're not too worried about that, unless something happens last quarter. But if you were worried about the risk in the overall, you wouldn't be buying puts. The reason why someone's buying puts on an institution, because they got to keep that money to work. If you're a small guy like you and I, well, we need to make sure that we maximize every dollar that we have. You don't want to be buying puts because it's going to take away at your overall profit. You're buying insurance that you may not even need. The best way to do it is to sell some of the position, sell half of it if you're worried about risk. I mean, that is always the solution. If something's keeping you up at night, especially on an equity trade, sell some of it. Sell some of it until you feel comfortable. And you can always get back in. We see this pullback here, and you could say, hey, that's a great opportunity to buy more. So that's managing the position. It's what you have to do if you're doing it yourself. You have to be active. So the activity that I'm going to discuss with you is here, and it's in the September contract here. So short term, specifically this earnings event here. As I mentioned, it has 15, well, I didn't mention it has 15 days, but there's 15 days to expiration. We have 3 days, 4 days that's going to tick away at these. So premium is going to, the time is going to take away. What we're going to see is the volatility increase here. So even though the time ticks away at this, we're going to see a vol rush that's going to kind of offset that for the time being until earnings happen. But the interesting thing is that they're coming here at the 75. It's got a 10-point expected move at this point. So it's closed at 81. They're buying the 75s here. They came in and they were initially buying at $2, and they got filled at some other prices here. What else is interesting is that we did see some buying in the 85 strike here and also the 80 strike, and we're seeing some around here. So we're seeing some positioning on that someone or some people could be a little concerned about what's going to happen on the reaction of this. So when they're buying puts, it doesn't necessarily mean that they know something, because there's always a reaction. They could have horrible earnings and have an upbeat forward guidance and surprise to the upside. So playing earnings is not something that we want to trade. When you are owning stock, you have to hold through it because you're just looking for long term. That's this noise. But it's interesting to see this kind of positioning right now. And if I were concerned about this position, and I would see this, if I were worried about the risk that I have, then I would say to myself, well, maybe I should take some off the table, see what's going on here. So that's how to use the options market. Going back to what we discussed, understanding what's going on in the options market is going to help understand what you should do or what you ought to do with your position. And this is a perfect example. At this point, I would look at this and I would probably, tomorrow, I would keep an eye on this as well. And then possibly, if I'm long, I'm saying, hey, look, what's going on here? Maybe I should manage this a little bit differently. And there's a couple different ways. Maybe just sell some calls against it. You could do that as well. Instead of having to close it out, you could sell calls and get it closed out. So that helps you understand what you should be doing day to day in looking at these positions, or understanding how the options market is going to influence this. Because if we saw strong calls on the side, it could be a very speculative bet that earnings are going to blow out and someone's speculating that prices are going to soar higher. So not just on earnings, but overall understanding what's happening in the options market, because that's where positions are being placed. That's where money's going, and they're making strategic directional bets in most cases of what they assume, or trying to position what they're going to do for short term or even long term. So, I mean, if we saw something here in the January contract, if I saw some big buying here at these 80 strikes here, someone came in and bought 1,000 contracts, that would make me feel comfortable about my position and about holding it longer as well. So understanding what's going on in the options market is going to help create more confidence and understanding of how and what you should be doing with your stock positions, and even if you're trading options as well. So that's what I have for you. I wanted to go through a real case example here on specifically using options, using stocks, even if you're a stock trader or stock investor, understanding what's going on in the options market, because the options market, the derivatives market, influences the equity market. So make sure you like the video below and leave a comment, and I will see you in the next one.